Good afternoon, World Wide Web. This is James with another stock stock update on Credit Suisse, the formerly known as Credit Suisse. Their locations are still going to carry that name. However, they decided to clack the stock together with UBS. Um, the CS ticker symbol has been delisted, and if you own shares of Credit Suisse, they were converted to UBS at a rate of 22 to 1. Just the other day, you probably noticed that you got frozen. You might have had to wait 24 hours. In my case, it was 48 hours. I had some options and they converted over to UBS options. Um, I was told that the Credit Suisse repeatedly was going to continue as a public company unto itself. Um, I don't know how that would have worked with kicking the money back upstairs to UBS. So I guess it was pretty silly to think that it wasn't going to become UBS stock, but we're kind of in the same boat. There is not going to be a Credit Suisse recovery. It's all about what happens to UBS at this point, and I don't know what's going to happen to UBS at this point. They just bought very, very, very cheaply a very, very, very big bank. They got it for pennies on the dollar. However, I think that comes with the caveat of not leaving Switzerland on the hook for this one. I got a feeling that they're going to have to eat and absorb some of the garbage that used to be Credit Suisse's problems on the next probably earnings report or two. The banking sector has been kicked into the ground. UBS is what you own now. You can now sell your UBS options that you have. They're at a 22 to 1 rate. They still say 90 cents. I had the 90-cent options. They're in the money at 22 to 1. Your 90-cent option is convertible at $19.80 on its expiration date. Your $1.50 option is convertible at $33 on its expiration date. So if you bought those $1.50s, I'm sorry, but it doesn't look like it's that likely. However, your 90-cent options are pretty fantastic. Or if you just own stock of it at 89 cents, so far it's doing okay. It's better than $19.80. So I don't know. Do you stay with UBS? I guess that's the question at this point, or do you let it go? Well, here's what today says for UBS. That looks like a big crash. It's really not. From 55 down 12 cents. Not that big of a deal here. Over 5 days, it actually was looking good, kind of going up here for a couple of days. Over 6 months, we have a company that used to be $16 that turned into a $20 company. We had a nice 15% run, and over the last year, we had a 31% run. Most of this was long before they bought Credit Suisse. That uptick. Yeah, Credit Suisse didn't happen until here, and actually probably hurt their price. But they got up here all on their very own, from 16, 15, all the way down into the 14s. So the company was a growing bank. It was getting bigger. It did 25% almost in just over 6 months. Could it do that again? I don't know. Let's take a look at what we can find out on their balance sheet. I don't think it's going to tell us the future, but maybe we can get an idea. Whoops, it's way down there. No. Not going to show me. Hang on a second. I'll be right back. Well, Google Finance has removed all of the income statements, all of the balance sheets. They've taken it all down. It's not available on there now. I can go looking for it, but honestly, I don't think there's going to be much meaning in it, and I don't think it's updated in live time by Google anyhow. It's not going to show us what the two companies clacked together. It looks like it's not going to show us how much of Credit Suisse's garbage UBS is going to have to pay for. It's not going to show us a lot. I don't like it anymore. Not interested in Swiss banks. They broke all the rules of capitalism on this one big time. Um, so I don't know. Uh, I'm letting it go. I already did let it go. I let it go this morning. Um, Took a little beating on it, but I didn't want to sit here and wait for UBS to grow up to $25 or whatever it was. It could very well get there. It could go to $30 or $40, I suppose. The bank's history used to be a $22.50 stock back in 2016, and that looks like it's the highest it's ever been. So, did UBS get better or worse for doing this? I would say they'd have to have gotten worse for now. Yeah, the revenue is probably going to be higher line now, and their net income is probably going to be destructive for the next few quarters. That would only seem like common sense. I can't see, unless just Switzerland's eating the whole thing. I'm pretty sure Credit Suisse paid back Switzerland. I think we learned that in the last video. So I don't know if they got Credit Suisse to pay themselves completely back. I don't know how they did that. Probably by diluting the shares by 66%, taking it down to 1/3 of its previous value. Maybe they sold into that really hard for the last 3 or 4 months to pay for this. Maybe they stuck the CS stockholder with the bailout. That's always possible. And if that happened, if there's no garbage that comes with CS, if right now they just pulled off CS clean and clear, if that's where the money went, I would predict this one is going to rifle upwards very strongly. But it's scary. What garbage got left behind? The dilution that they did on the CS, I guess it paid back Switzerland completely, and they canceled all the debt of CS, so it shouldn't come with any debt. I don't know. You know what? I'm slowly talking myself into thinking that this thing might turn out to be something, but it's just a guess. If CS comes with no debt, which we know it does, they told all their bondholders to FO, and they already paid back Switzerland, CS did, before this acquisition even happened, before the official closing of this thing. Switzerland was completely paid for. What garbage is coming with CS? I don't know. Doesn't sound like much garbage after I just got done saying it out loud. Lots of people are quitting. They've already gotten rid of 10% of the CS staff. They're probably going to be able to close the CS corporate headquarters. They're probably going to be able to integrate the two banks and get rid of 30% of everyone on the CS's payroll, and hopefully acquire all the good loans. And if they were really smart, they'd have gotten CS to pay for the garbage, and maybe they did. Maybe they very well did. This thing here could, shoot up to 40 in a couple of weeks or a couple of months. As soon as the next earnings come out, I guess we're going to have a real good idea of what they did here. UBS's next earnings date, that's not even going to tell me here. Let me see if I can find out for you real quick. You're looking at August 31st, so about 2.5 months from now, you're going to have to just sit on this thing and not know anything. It doesn't sound like. But if you want to research how much garbage is going to come with CS, I suppose we can absolutely do that. We know that they didn't owe Switzerland any money at the end, and we know that their debt got canceled. So those are two clues. What negative baggage is going to come with them? I guess the higher payroll and having the redundant employees still, and having redundant rents still that they haven't closed out yet, leases that they might have been stuck in. It might take a couple of quarters to unwind the clacking together of these two companies, and that could adversely affect earnings because they have two home offices to pay for. They have two sets of executives to pay for until they fire the rest of them. They have two sets of everyone that's not a teller. They have two sets of just redundant systems. Until they get rid of the second set, sounds like the problem's taking care of itself. CS employees are leaving. Well, 10% of them already have. Probably is going to need to be like 50% or something like that in the end. Everyone that works for the bank that's not a teller probably will lose their job, I would imagine. And they actually aren't, CS wasn't heavy on locations. They were very spread out. They don't really have one on every corner here in the United States. That might be different in Switzerland. They probably have them all over the place, but it wasn't a rent heavy division. Lots of locations over here in the United States, but they did a ton of business with the United States. Lots of people use them. So I don't know what to make of it exactly. It's a gamble. Does it come with shit? I would say it doesn't come with as much shit as it would have come with if they didn't do the Scooby-Doo maneuver of whacking everybody by 66% when they diluted CS and brought it down to 90 cents so that they could sell into it. They drove it down to the 70s. It came back. They drove it down to the 70s. It came back. Got back to the 80s. They probably sold into it really hard and really long. And they probably, I don't know how much cash that was, that they were able to get. 2/3 of the market cap of Credit Suisse, I guess they were able to pocket and use for bailout money. And they did pay back Switzerland completely. I don't know. Could be awesome signs. I'd say maybe get some options or hang on to your options if you have them till August 31st. It's either going to blow up or blow down. I'm not really sure. Maybe loosen your position a little bit as we get closer to the earnings date. There's going to be a lot of optimism building, and that's maybe when you want to sell. Maybe you don't even want to hear the earnings. Maybe you just want to take advantage of some pre-earnings hype. It always happens. Everyone's going to be all excited to hear about this new bank with this new great big income line, with this no debt acquired extra, with the, hopefully how many people have been fired already and how much lower they've done the cuts. And it might just be one big great news session after another. This thing could go absolutely bananas. Probably a really good one to straddle on earnings day, I would imagine, if you like the straddle. I'm not. I know what it is, but I haven't tried one yet. But they say if a stock's really going to move, then straddle it. But look into that. But I'd rather you just pick the right direction. Maybe just loosen your position on it if you're large. Because if it does hit, it's going to hit big. Maybe you won't need such a large position, but if it falls, you won't lose everything. But could it fall below the strike price of the 90 cents to the $19.80? I guess it could. I like the next earnings report, but I'm not going to swear by it. So definitely do your own homework. Find out everything you can. There's a lot of work to do on this one. But just an update on what happened. Hopefully you're okay, and hopefully you're still a little bit right side up, or at least you see the hope of getting right side up. You could at least exercise those 90 cents right now and make 63 cents a share if you did exercise them. It's the company is big enough to absorb just about any kind of mass exercising without crashing. Everybody exercising and getting out. That may be a lot of what happens, but I'm expecting that 90 cent one to pucker up. It was 12 cents a couple weeks ago before the buyout. Now it's down to, I sold mine for 7 cents. So I took a pretty severe beating of maybe 50%. I just couldn't wait anymore. better opportunity came along. I like Carnival Cruise Lines, Norwegian Cruise Lines. I feel like they're going to 35 by Christmas or by January. So I just wanted the money there just because I felt like it would triple, and I could take half the money from this thing and stick it there where I really feel like it will triple for sure, instead of being a gambler. I don't like gambling. I don't even like hearing earnings reports sometimes. I'll chicken out right before them. I don't even want to hear it. You miss out sometimes, but sometimes you're like, thank God dodged a bullet. So it goes both ways. But the pre-earnings hype is very real, and that might be your ticket to get out of this thing a winner if you're not a winner right now. So the entire month of August will be your playground for UBS. Maybe before August, you want to grab some options on UBS or something for that earnings report. Those are going to pucker up nicely all the way through August. There's going to be a lot of optimism onto what happened here. That doesn't mean it's real, but there's going to be optimism. And you can just play that optimism. That would probably be your best play. Get in slowly, get in a little bigger come August, and get out before earnings, or leave a little bit and be a gambler. It's up to you. But the obvious play would be the pre-earnings hype, which would be extraordinary in this case because they've done double their size, possibly not bringing any debt with them, and possibly not owing Switzerland any money. This could be a real jewel. So, but be careful and don't gamble. Take care. Have a wonderful day. Please like the video and subscribe to my channel, and we'll keep you in tune in the future for any future developments on this one. Thank you. Have a great day.